Back, let's have a look at the SPY. Usually I do cover individual stocks, but it looks like I haven't covered ETF and S&P 500 in the back. So, but I traded a lot. I keep an eye in, like, I look at the heat map all the time. I basically, before I go into like go long or short any tech stock or let's say communication service or financial stock, I keep an eye on heat map and I keep an eye on indices, what's going on with the NASDAQ, Russell, or S&P 500. So maybe I have a few things to share. So if you guys are going to like it, we're going to keep making these kind of videos. If you don't, we'll just go back to looking at individual stocks. So today, flat pretty much, and I just want to disclose that yesterday I did short SPY and then I covered it in the morning. So I think I made like around 150%. I'm not sure, but I'll show it later. But so at the moment, so whenever I watch S&P 500 E-mini futures, basically I rely on volume. So anytime it trades within 60 million a day, SPY basically, well, that means nothing unusual happened. All right, anytime it spikes that above 60 million, that means it's becoming volatile, and that means that there is an opportunity to trade it. All right, so that's one indicator I use. Another is a moving averages. I always keep an eye on what's going on with 20-day moving average, 50-day moving average, 100-day moving average, 200-day. So for the most part, if you look at it, this yellow line on my screen represents 50-day SMA. It bounces off of 50-day for the most part. All right, not every time. Just like in September, I think we slipped below these levels, and then this level became resistance for a few times. But as soon as it gets back above, it keeps uptrending. Also, you need to pay attention to these simple moving averages, because if these moving averages uptrending, that's when you buy the dip. All right. If the moving averages start moving sideways, or if the moving average is starting rolling over, you don't want to be bullish. And I don't know last time when it happened, but just keep that in mind. And also more of a shorter term, this blue line right here is a 20-day moving average. That's what I was watching as a support today, and we bounce off of that. And also for more of a day trading purposes, I use 5-day simple moving average. This blue line on my screen represents 5-day SMA. If index slips below, just like it did here, below 5-day, and then tested 5-day, that's a perfect opportunity to short. And whenever it gets back above, okay, you can keep longing it. But today, the point is today it closed below it, and tomorrow that's the resistance I'm watching. Even though this is a short week, and it's gonna be quite weak, I think. Historically, it is quite. So let's watch this level. I'm gonna be watching this level as a resistance. And another indicator for S&P 500, basically I look at E-mini 500, S&P 500 index future, and if you look at this chart, every candle you see, like I have on top of it blue candles right here. Well, that's a put to call ratio that I use, SPX put to call ratio. Anytime I see that there's more puts were purchased individual day, and that that ratio goes above 2, I watch S&P to the downside. November 19th, it gave me that signal that, okay, so people shorted pretty heavily on Friday. And what did I do? Well, I came in on Monday seeing that, okay, even though it's not going, like it's making all-time highs, it was making all-time highs, I bought a put. I believe SPY 467 for December 3rd or December 1st. Anyways, I bought a put, one contract, made 150% based just on that indicator, all right? And also I keep an eye on heat map. I look at how overall sectors are doing, what they are doing. So if the rally is caused by, like, for the past a few days, I think a few weeks maybe even, the rally was based on these tech names. And as soon as those tech names started pulling back yesterday, and there were more other stocks were even coming down, but Nasdaq got hit the most. It dragged down S&P 500. So that's another thing to keep an eye. And also for SPY, so I don't overcomplicate anything. So basically, very, very simple. I keep an eye on MACD. So last time you see MACD had this bearish crossover right here in September. Well, we dropped 5% or so. And now we have same thing here, all right? Momentum is slowing, okay? It's moving sideways. It's not uptrending. This was a pretty big rally, and S&P 500 year to date, I think it's around like 25% up, all right? So I am going forward pretty much cautious, and I do think that we can definitely test that 50-day SMA before we see Christmas rally. So 50-day SMA somewhere here at 450 level. So that would be around like 4% drop if it does test that level. And I don't watch like a trend line. So if 50-day moving average is uptrending, yeah, that's where I buy the dip, and that's my support level. If 50-day moving average is moving sideways like it did for a bit right here, well, at that point, I become or short biased, or I just don't trade it to the long side. I just stay on the sidelines. All right. So that's another thing. So what else you can watch? You can watch volume bars. I do keep an eye on volume profile basically a lot. And if you look at the volume profile, well, we have a little bit of a distribution happening here between 465 and 470. So if it slips below that 464, it's coming back down to these next demand zone, which is 452, 453-ish levels. All right. So until then, there's not much of a support here at these levels. You can see that there's not much volume traded. So that's another thing I keep an eye. So what else you can look at? Well, some people use Bollinger Bands. You can use that too. And well, it looks like if you were wondering what was happening on Friday, well, that's where it rejected. So upper channel of a Bollinger Bands, that was the resistance on Monday. All right. So I think that's pretty much it. And also, if you use Thinkorswim, you can use pretty much index watch and come in, take a look what's going on with overall, like how many stocks are contributing to S&P 500 rally if it's rallying. And you can see how many stocks are advancing, how many stocks are declining. So today 312 stocks were up, 192 were down. And you can also see here what were the biggest like contributors or biggest gainers, like Dollar Tree, I'm saying seeing did well, and looks like there were Hershey, I believe, did well. Looks like here Occidental Petroleum. So you can play with this, and that's where I spend some time as well. And put to call ratio here a little bit different. So if you see anything more than 0.65, I would say, then that means people are buying more puts. And if it's lower, that means people are buying calls. And you can see here on advancing that the put to call ratio is lower. That means on advancing stocks, more people were buying calls, and on declining stocks, more people were buying puts. So I hope it helps, and that's all I have for this video. And if you guys liked it, we can keep covering. And yeah, that's it. I'll see you in the next one.